Hello, it's a pretty lovely good evening from here in Chile, and hope as always that each one of you are keeping absolutely fine, happy, and of course in fine spirits. So on such count, we start today's this particular session. Last time, actually, you remember we took up section 2 and we did 2.1, which encompassed, in fact, 4 parts, and through that particular question, we try to actually recap all the concepts with respect to this particular chapter, which we have already done. Now we are beginning the session of the day with question number 2.2, correct? So 2.2, if you are ready, we on our side are absolutely ready. So 2.2, herein, in this particular question, it is given A1 and A2 are two partners, correct? First of all, and they are in the partnership. Sharing results in the ratio of 3:2 as usual. This information is given. Balance sheet date is on 31st of 3/2022. Obviously, we have to mark out their capital balances, 30,200 and of course 35,400. Besides that, on the asset side, we have land and building, plant and machinery, furniture and fittings, and then stock, then debtors, and then cash. On the opposite side, we have got here bank loan, that is a liability, sundry creditors and bills payable to the extent of what we call 20,000 and 30,800. And here this time we have got workmen compensation fund to the extent of 12,000. I will talk about the treatment of workmen compensation fund at great length. Just actually pay attention over here. On 1st of January 2023, A3 is admitted into the partnership firm, and his profit sharing ratio will be 1/3. He will come along with 30,000 worth of capital. And here it is written he would not be able to bring his share of goodwill in cash for rupees 10,000. His share of goodwill is estimated at 10,000, but he could not bring his share of goodwill in cash. That is the point. The book value of land and building will go up by 10,000. So you are going to credit the revaluation account by 10,000. And that of furniture will be reduced to rupees 10,000. See here, value of furniture given in the balance sheet is 10,600, and below it is given that furniture had been reduced to 10,000. That means it is coming down by 600. So 600 will be debited to revaluation, and stock will be reduced by 10%. So 10% of 38,500. So that is reduction. Further, we are supposed to create a provision for bad debts at the rate of 5% of sundry debtor. Again, it is a loss. Now here it is written, actual liability of workmen compensation fund is estimated at rupees 2,000. Regarding workmen compensation fund, you have to exercise caution. But before that, let me also tell you, if in the balance sheet you come across any such item like general reserve, profit and loss account, correct, reserve fund, without an iota of doubt, these items will be credited to old partners, because this is almost like savings of old partner, correct? So why they would like actually these savings to be unnecessarily given to the new partner? So that is the reason at the time of admission, generally if there will be any balance in the accumulated reserves in the form of general reserve, profit or loss account or reserve fund, that will always be credited to old partners. Of course, everything is done in old ratio except the goodwill, correct? So it will be credited to old partners. Further, if we come across workmen compensation fund, we should not blindly credit it to what we call partners capital account. First of all, we will have to see whether any information related to workmen compensation fund is given or not. For example, suppose if in this question there would not have been any information with respect to workmen compensation fund. Suppose if in this particular question there would not have been any information with respect to workmen compensation fund, then in that case I would have taken entire 12,000 to the credit of the what we call old partners, correct? Workmen compensation fund. But this time, as you know why workmen compensation fund is created by an entity, in order to meet any eventuality which may arise in connection with workmen. For example, a workman might actually meet with an accident, correct? So we may have to compensate him. So that is the reason entities generally resort to creation of workman compensation fund. Now, if workmen compensation fund is given only in balance sheet, without an iota of doubt, you will take the entire amount 12,000 to the credit of what we call partners capital account. However, if some information is related to workmen compensation fund, for example, in this case it is given. For example, in this case, this time it is given that actual liability of workmen compensation fund is 2,000. So what I will do, workmen compensation fund, which is appearing in the balance sheet at 12,000, out of that 12,000, I will have to set aside to meet this liability. Are you getting my point or not? So 2,000 I cannot divide or I cannot take to the credit of the partners because this 2,000 is not free. Because it is stated in the question that actual liability against workmen compensation fund is determined at 2,000. That means out of 12,000, 2,000 is payable to workers. So it is not free. We will leave it in the balance sheet as it is. That means out of workmen compensation fund 12,000, 2,000 will be reflected in the new balance sheet. Number one. And the rest of the balance, 10,000, will be taken to the credit of the partner's capital account. Is it clear to you or not? Yes, sir. Further, it is given that bank loan will be paid off. You will pass a very simple entry, bank loan account debit to cash account. So both these things are not going to affect the revaluation account. However, one thing I would like to actually clear out. In the current year's examination, you had a question with respect to workmen compensation fund. Correct? Suppose workmen compensation fund in the balance sheet is 12,000. Now you tell me what will be the treatment of this, and no further information is given, let us say. So in that case, I will take it to partner's capital account, old partner's capital account in old profit sharing ratio. Now second situation is given in the question that in the balance sheet workmen compensation fund is 12,000 and liability against workmen compensation fund is 2,000. In this case, only 10,000 will be taken to the partner's capital account and we will leave 2,000 in the balance sheet as it is. Correct? Now, there could be a third situation. For example, in the workmen compensation fund, there is a balance of 12,000 in the balance sheet. And below, it could be given to us that liability against workmen compensation fund is estimated at rupees 15,000. In that case, what will you do? Because this time, the liability is more than what you have saved for. For example, you have created 12,000 worth of fund to meet the liability, but the liability is in excess of your fund. So that means you will have to create, in this case, 3,000 more. You will have to transfer 3,000 more to meet this particular liability. And whenever in accounts we have to create any fund or reserve, we debit the profit and loss account. Indirectly, it is considered as a loss. So this time, what I will do, because this time my liability portion is more, so 3,000 I will debit to revaluation account. And in this case, nothing will be credited to partner's capital account. Partner's capital account will not be credited with any amount. And in the balance sheet, I will write the workmen compensation fund at rupees 15,000. Is it clear to you or not? So these are the three situations which we may have to face in case of workmen compensation fund. Is it clear to you or not? If it is clear to you, now we can solve this particular question, correct? So now we are in a position to solve out this particular question. Let's actually try to solve it. As I have a habit of solving the entire question at great length and breadth, so this is exactly what I am going to do. Keep the sheets in front of you also. A1 has got a balance of 30,200. Keep an eye over this, correct? A2 balance is 35,400. Bank loan is this one. Workmen compensation fund is 12,000. We have a cash balance of 20,300. These are the things we have to take care of. In this particular question, besides that, new partner's profit sharing ratio is 1/3, whereas the old profit sharing ratio is 3:2. Again, you have to keep an eye for that. Further, it is given that new partner will come along with 30,000 worth of capital, but his share of goodwill is determined at 10,000, but he failed to bring his share of goodwill in cash. So these are the things which are given to us in this particular question. Now we shall try to solve out this particular question. For that, as usual, I will require huge amount of space, but space is not there. So what I will do, I do not want to rub it out. I will do the question here. So 2.2 is the question which we are picking up now. 2.2, correct? In order to do this particular question, first of all, you let me know in the last question how we started off. First, I told you, first of all, it is not necessary, but for your own sake, because question has simply asked us to prepare the relevant ledger accounts, correct? Because question has asked us to prepare relevant ledger accounts. So relevant ledger accounts, as we know, I am supposed to prepare revaluation account, number one. Okay, I will prepare revaluation account. Besides preparing the revaluation account, okay, I think this much of space is enough. We shall have to prepare the capital accounts also. So I will prepare capital accounts. Capital accounts. First, let me frame the formations So this is the capital account, and there are three partners this time. A1 and A2 are old partners, and A3 is your incoming partner. A1, A2, A3. As you know, along with that, we also prepare cash account also. So cash bank account, I will also prepare cash bank account. And just to make you understand better, although it is not necessary, just to make you understand better, I am preparing another account, A3's current account. Sir, why you are preparing new partner's current account also? That I will let you know in a short while. I will prepare current account also. Correct, A3's current account. Why I am preparing this account, that I will let you know in a very short while. Don't worry about that. Correct. Now in this particular question, first of all, I am going to toss up some question and you will have to deliver me the answer. Correct. Could you tell me, in this particular question, could you tell me what is the share brought in by A as far as his capital is concerned? Yes, sir, I am in a position to deliver the answer. Now deliver the answer in a quick time. Sir, capital contribution is 30,000. Well then, this will be the entry cash account debit to A3 account. Correct. So A3 has brought in along with him 30,000 worth of capital. Entries are generally not asked in the examination, but still. Now could you tell me how much he is bringing in for his share of goodwill? First of all, you ask yourself the question whether he is bringing in his share of goodwill in cash or not. No, he is not bringing in this particular question. His share has been estimated at 10,000, but he is not bringing his share of goodwill in cash. Had he, then I would have written the entry cash account debit to premium for goodwill if he would have had brought his share of goodwill in cash. But unfortunately, he is not bringing in. When new partner does not bring his share of goodwill in cash, when new partner does not bring his share of goodwill in cash, obviously I am not going to pass this entry. Obviously, I am not going to pass this entry premium for goodwill account. I am not going to pass this entry, because he is not bringing any share of goodwill. Just to make you understand better, I am writing this entry. There is no need to write this. Correct? Because he is not bringing his share of goodwill. But in spite of that, we will credit the goodwill to the old partner. Sir, how it is possible? If the new partner is not bringing his share of goodwill in cash and still you are crediting the same. Yes, you are absolutely right. Correct? So point here which you need to know is that if new partner doesn't bring his share of goodwill in cash, in that case, we will debit his current account. Although you can debit his capital account also, but I would advise you in such a situation, you better debit the new partner's current account. So you will have to pass in this case another entry. That means whether the new partner is going to bring his share of goodwill in cash or not, irrespective of that, the amount of goodwill must be credited to old partners. Is it clear to you or not? So A3's current account, so that is the reason why I opened current account. So A3's current account and his share of goodwill is 10,000 and it will be credited to old partner's capital account. Now old partner A1's capital account, don't write here current account, to A2's capital account. And so many times I have already told you that goodwill must be credited in sacrificing ratio. Now could you tell me what will be the sacrificing ratio in this particular case? When only old partner shares are given and new partner shares are given in the question, the old ratio itself happens to be the sacrificing ratio. So we need not require to take the pain of computing the sacrificing ratio. The sacrificing ratio shall remain intact at 3:2. Is it clear to you? So 6,000 worth of goodwill will be credited and 4,000 worth of goodwill will be credited to A. Later on, we will see that there will be a debit balance in A3's current account. And it will be reflected on the asset side. It means in future, A3 will bring 10,000 worth of goodwill. Is it clear to you or not? And whenever in future he is going to bring the goodwill, in that case, I will write the entry cash account debit to A3's current account. And his current account at that time will get closed. Is it clear? So this is how, first of all, you need to pass the entry. Once done up with this particular part, now move over to the preparation of the revaluation. As far as information with respect to revaluation is concerned, we have already gone through. For example, there was a information in this particular question that value of land and building has gone up by 10,000. So you are going to simply write 10,000 on the credit side of the revaluation account. And I talked about this particular fact that value of furniture has been reduced to 10,000. So by how much it is reducing? It is reducing only by 600. So you will have to write 600 on the debit side of the revaluation account. Further, it was given that stock is reduced by 10%. So 10% of 38,500 is equal to 3850. You are going to write here 3850. Then it was also given in the question that we are supposed to create a provision for doubtful debts at the rate of 5%. So I will take 5% of the debtors, and 5% of the debtors will be equal to 950. Is it clear to you? So these are the things which are related with what we call revaluation. Now we are in a position to tally it out. If I am going to tally it, 10,000 credit side is bigger. Obviously my profit in this case, 4,600 will be profit. And this profit will be transferred to the old partners account in their old profit sharing ratio. So I will write here profit transferred. If I will transfer the amount of profit to A1 in old ratio 3 by 5, that will be equal to 2,760, and A2, that will be equal to 1,840. Also, I would love you to actually keep on doing the calculation, because sometime along with teaching, when we do the calculation, we might commit. See, after all, we too are human, and to err is human, so everything is possible. Anyway, once you are done up with what we call revaluation, your next step should be balance brought down. I had in the last session talked a lot regarding what we call this, correct? It is very important that you have to think in a sequential manner, correct? Otherwise, you are going to waste a lot of time in the examination. So immediately have a look over the liability side and try to find out the balances. Now, balances brought down is equal to 30,200. So many among you are actually watching these lectures, but problem is that, correct, some of you still are not having the books, then it will become a problem. So immediately buy my book from Commercial Law House, correct? I will show you the copy in the next session, correct? The book is available in Amazon also, and in so many sites. Simply search out Financial Accounting by Sanjay Welkins, and you can get the books. When the books will be in your hand, then you will comprehend it in a better manner. It will help you a lot, correct? Anyway, A2's capital is 35,400 as per the balance sheet, okay? Very importantly, henceforth, whenever you are going to solve the question, correct, always keep an eye, whether in the balance sheet is there any general reserve. Always keep an eye whether there is any general reserve, whether there is any profit and loss account, correct? On the liability side I am talking about, correct? On the liability side, whether there is any reserve fund, correct? If these items you find on the liability side, you will have to credit them to the old partners in their old profit sharing ratio. Similarly, it could also be a possibility that on the asset side, you may come across some items like profit and loss account. If profit and loss account is appearing on the asset side, it means it is an accumulated loss. Similarly, if there is any suspense account, sometime it is written miscellaneous expenditure, correct? Or sometime it is written in this manner, expenditure yet to be written off, expenditure yet to be written off. So if you come across such item on the asset side, then you will have to debit them to the partner's capital account. Is it clear to you or not? So these are known as accumulated reserves. These are known as accumulated losses or valueless assets in simple words. Anyway, in this question, there was workmen compensation fund. And workmen compensation fund in the balance sheet is 12,000. We talked at great length regarding workmen compensation fund, isn't it or not? Actually, there is no need to write the entry, but just to make you understand the point better, I am writing this entry. What will be my entry? See here, workmen compensation fund account in the balance sheet is 12,000. Now, workmen compensation fund is having a credit balance because it is reflected in the balance sheet. And in the entry, when I am debiting it, it means workmen compensation fund account is closed because credit balance and debit balance, correct? Now, out of this workman compensation fund, I will write another entry, workman compensation fund liability account. Because out of this 12,000, 2,000 is the liability. So this liability amount will appear in the new balance sheet. And now whatever balance is there, that balance will be transferred to old partners account, to A1 account, to A2 account. 10,000 out of 10,000, 6,000, that is 3:5. So balance 10,000 will be credited to old partners account. This is how you are going to pass the entry, correct? So on the credit side of partners capital account, I will write here workman compensation fund. As I have already told you, we have divided only 10,000 and not 12,000, correct? And in old profit sharing ratio, everything is done in old profit sharing ratio. Only thing is that when goodwill is credited, that is done in old sacrificing ratio. Now, after having done up with this, now whatever the result of revaluation was there, you take that to the partner's capital account. In this case, there was profit, so I will take the profit to the credit side. Now, revaluation profit we have seen already, 2,760 is the share of A1 and 1,840 is the share of A2. Correct? After the revaluation, your next step should be to take care of the capital brought in by the incoming partner, and you have written the entry cash account debit to A3 account. And new partner is bringing in 30,000. Because this entry is affecting the cash account, quite obviously you will have to move to the cash account now. In the cash account, first of all, you write balance brought down. The balance brought down as per balance sheet is 20,300. In the balance sheet, cash account is appearing at 20,300. Now, because in the capital account you have written buy cash, immediately you are going to cross it to the cash account, and over here you are going to write 2A3's capital account. 2A3's capital account. Now, capital is 30,000. So you will write here 30,000. Clear? Is it clear to you or not? Yes, sir. After that, he did not bring anything for the goodwill. So we did not pass any entry like cash account debit to premium for goodwill account. Correct? So after that, we wrote the entry actually A3's current account debit. A3's current account debit to A1 to A2. This is the entry we wrote, isn't it? That means A1 and A2 will get credited, and they will get credited because of A's current account. In the entry, we have written A's current account debit to A1 to A2. So on the credit side of A1 and A2, I am going to write their respective share of goodwill. 10,000 was the goodwill. It was credited to the old partners in old ratio. Because we have written on the credit side of partners capital account, A's current account. Now, in the A's current account, what I am going to write? I am going to write A1's capital account 6,000. I am going to write A2's capital account, although it is not a necessity to prepare. Just to make the point clear. Now, you can see when I am going to balance it, it will have a debit balance because our debit side is more. It is having a debit balance of 10,000. So that means A's current account is almost like a debtor to us. Is it clear to you? You are going to reflect this item on the asset side. Is it clear to you or not? Absolutely clear, sir. So, after this, what we are supposed to do, is there anything in this particular question? So, everything is over. No. There was another entry with respect to bank loan, if you remember, in this question. Although entries are not asked, but just to make the point clear. So, I will write the entry bank loan account debit 20,000. We are supposed to pay the bank loan 20,000. To cash account. So bank loan is paid. That means in the new balance sheet, bank loan will not appear, and due to this entry, my cash account will get reduced. So on the credit side of my cash account, I am going to write here by bank loan. Is it clear to you? And there is no need to prepare bank loan account. Suppose if you will prepare the bank loan account, you will write by balance brought down 20,000, and then you will write to cash. Is it clear? So this is the question. Now, we are in a position to tally it out. We have prepared everything now, and now we are in a position to balance them. When we will balance them, I will write here to balance carried down. So, if I am going to balance, my answer will be 44,960. 44,960. And then, as far as balance of A2 is concerned, balance of A2 is 45,240. 45,240. And balance of A3 obviously is 30,000. Now we will prepare the cash bank account also. 50,300 minus 20,000. So balance carried down in cash account will be equal to 30,300. Is it clear to you or not? So absolutely clear. Of course, besides that, now we are also in a position to prepare the balance sheet if you want. Correct? We can prepare the balance sheet. So post-admission balance sheet, as the title goes, post-admission balance sheet. Now I will write here post-admission balance sheet. In order to prepare the post-admission balance sheet, first let me stretch a line. Well, correct? So now we are in a position to, as I told you, prepare the balance sheet. In order to make you understand better, let's have a look over here. First of all, land and building, it was given in the balance sheet at 40,000. And we have just seen that its value gone up by 10,000, so I will add 10,000. It is always better to keep the old balance sheet in front of you, correct, when you prepare the new balance sheet. So land and building revised value is now 50,000 obviously, and now we move over to furniture and fittings. As far as furniture and fittings are concerned in the balance sheet, you must have noticed it is given at 10,600 and its value fell by 600 and it is reduced to 10,000. This is the revised value. Similarly, next item is stock. As far as stock is concerned, it is given 38,500, if I am not wrong, in the balance sheet, and it decreased by 10%, that is 3850. So in the outer column, I will write 34,650. 34,650. Likewise, now we will pick up the next item. Next item in the balance sheet is debtors. And the value of debtors is 19,000. We created a provision at the rate of 5% against the same. The provision was 950. Is it clear to you or not? Is it clear? So, 19,000 minus 950 is equal to 18050. This will be the value. Cash account also we prepared, and the revised balance, that means balance carried down in the cash account which we computed was 30,300. And you should not forget to write A's current account. That is very important because now there is debit balance, and debit balance reflects that Mr. A is supposed to bring his share of goodwill in future, 10,000. Is it clear to you? If you want to tally it, the total will be equal to 153,000, I think so. So 1,53,000 will be your total. Correct? 1,53,000 will be your total. And as far as liability side is concerned, all you have to do is first of all write the capitals. As far as capitals are concerned, A1 you computed 44,960 is capital new balances. A2's capital is 45,240. You simply put it over here. A3, the incoming partner's capital balance is 30,000. So I will write here 30,000. Besides that, in this particular question, there is given bank loan. But we will not write bank loan in the balance sheet now because bank loan has been paid off. Correct? There is no need to write, just to make you understand. Besides, there are sundry creditors and bills payable. Worth rupees 30,800. And as I told you, now instead of workmen compensation fund, I will write workmen compensation fund liability because this amount is payable to workers now. Liability against the same is determined at rupees 2,000. So this is how we are going to do this particular question. Is it clear to you or not? Yes, sir, absolutely. Hope you have understood it better. And now we take up the next one. As far as next question is concerned, this was 2.3 which we picked up. I have written actually 2. In fact, now I'm not picking 2.3 right now. I'm picking up 2.4 first because 2.3 is quite easy and you will be able to do it by yourself. Correct? 2.4. F1 and F2 are partners in the ratio of 3:2. Correct? So, and their position is given to you as follows. F1's capital balance is 12,000. F2's capital balance is 10,000, correct? Besides that, there is general reserve. Obviously, general reserve will be taken to partners' capital account, correct, in old profit sharing ratio. There is workman compensation fund also in this particular question. Just a moment ago, we talked at great length regarding workman compensation fund. If there will be any information, we will take care of workman compensation fund. Otherwise, we can straightway take it to the credit of partners' capital account. Besides that, we have got sundry creditors in this particular case. Cash balance is 9,000. Now, further, we are given very first information is with respect to workman compensation fund. It is given, first of all, it is given that F3 is admitted, his coming for 20% profit, admin 1 by 5. And the liability or workman compensation fund is estimated at rupees 2,000. So what will be the treatment? You let me know. There is balance of 4,000 in workman compensation fund. Out of that, I will keep aside 2,000 to meet the liability. And balance 2,000 I am going to credit to old partners capital account. Clear? Further, it is given F3 to bring in 3,000 as premium out of his share of 3,600. Now his share of goodwill is estimated at 3,600, but he brought in only 3,000 and 600 he could not bring. Now we know the treatment. Whatever amount he is bringing in, we will pass the entry cash account debit to premium for goodwill account, correct? And then we will credit entire 3,600 to the partner's capital account by debiting what we call 600. I will let you know in a short while. He is also to bring in 20,000 as his capital. Simple. Now this is very interesting line in this particular question. General reserve is to be maintained at its original value. Sometime it will be given to you in this manner that a particular reserve will have to be maintained at its original value. So under such circumstances, what we are supposed to do? Under such circumstances, we will see that first of all, I will write the entry general reserve account debit to old partners capital account, in this case F1 and F2, correct? We will credit the amount of general reserve 12,000 to old partners as we normally do. But if it is stated that general reserve is to be brought to its original value, then we will have to pass another entry, F1 account debit, F2 account debit, and even F3 account debit to general reserve. So on account of this entry, again there will be a balance in general reserve account. Is it clear to you or not? Clear? The first entry shows that now general reserve account is closed because it is credit 12,000, and when I am going to pass this entry general reserve account debit to F1 to F2, general reserve account will get closed. But the question is says that we want the general reserve to appear in the new balance sheet at its original value. So in order to appear it at its original value, we will debit the all partners in the new firm, and again general reserve will appear at 12,000. This 12,000 will be divided among all these three partners in their new ratio, correct? So this is the only treatment which required little bit of attention in this particular case. Further, it is given that rupees 2,000 out of creditors is to be paid at 5% discount. Question state that rupees 2,000 out of creditors are to be paid at a discount of 5%. Because you are earning a discount from the creditors, quite obviously, in this particular case, it means there is a gain to you. So how to solve this particular question? In order to solve this particular question, let us have a look, and I will solve it for you as usual. So in order to solve this particular question, let me create a bit of space for me, or should I be able to solve it here itself? Okay, I will try to solve it as much as possible here itself. Just hold on. Right. In order to solve this particular question, first of all, suppose if I'm going to ask you, now let me have the entries from you. First of all, with respect to capital and goodwill, how much he is bringing in for capital contribution? Cash account debit to, what is the name? How much he is bringing in? In this question, he is bringing in, actually, just wait. cash account debit 2, he is bringing in 20,000 as capital, F3. So this is the entry which we are going to pass, 20,000. Is it clear to you or not? What will be the next entry? The next entry will be F3 to bring out of 3,600, he is bringing in only 3,000. So cash account debit 3,000 to F1, to premium for goodwill account, because he is bringing in 3,000 and he could not bring 600 as his share of goodwill, correct? First of all, whatever amount was brought in, that must be credited to old partner, premium for goodwill account, 3,000. We are going to credit it to old partner's account, F1 and F2. Now, the old profit sharing ratio will be equal to 3:2. Old ratio is 3:2. That is why sacrificing ratio will also be 3:2, because only old partners profit sharing ratios are given and new partners profit sharing ratios are given. So I will write here 1,800 and 1,200. And his share of goodwill was 3,600, out of which he brought 3,000 in cash, that's fine. But even though if he is not bringing 600, still we are going to credit that amount. So the entry will be F3's current account debit 600, and we will write here 2 F1 and 2 F2. Is it clear to you or not? 2 F1 and 2 F2. How much is the amount which I should use? 600. So ratio is 3:2. So that will be 360 and 240. So this is how the entry will be written. Is it clear? This amount he failed to bring in. That is why we are going to debit F3's current account and we are going to credit F1 and F2. Is it clear to you or not? Absolutely clear. Further in this question, it is given that, where is the question? Regarding workman compensation fund, I have already told you out of 4,000, although I need not require to pass the entry, just to make the point a little bit clear, workman compensation fund account debit, there is 4,000. Out of 4,000, I will have to keep 2,000 to meet the liability, workman compensation fund liability 2,000, and balance 2,000 will be divided between F1 and F2. Of course, in old ratio of 3:2. So 2,000 into 3 by 5 will be 1,200 and 800. Correct? Further, in this particular question, it was given that general reserve is to be maintained at original value. Now, as far as general reserve is concerned, we have to pass two entries. One, general reserve account debit. General reserve in the balance sheet is given to you at rupees 12,000. So you will write here 12,000. Then I am going to write here what? General reserve account debit to F1 and to F2. F1 and F2. Correct? Now out of 12,000, first of all, I will divide this 12,000 in the ratio of 3/5. So it will be equal to 12,000 into 3 divided by 5, that is equal to 7,200 and 4,800. 7,200 and 4,800. Is it clear to you or not? Because question has stated that general reserve account must appear in the balance sheet. Indirectly, it means whenever in the question it will be written in this manner that general reserve is to be maintained at its original value. Correct? So you have to take care. First of all, you will credit the general reserve to the old partner. Now general reserve account balance is closed. That means now again you are creating a reserve of 12,000, and that means all the partners will have to contribute to this creation of general reserve so that it again appears at original value. So for the same, what I will do, entry number B, I will have to debit all the partners F1, F2, F3. So that means in order to create general reserve, of 12,000, all these three partners are contributing and they will have to contribute in their new profit sharing ratio. You will have to compute the new profit sharing ratio. New profit sharing ratio you can easily compute by multiplying remaining profit with the old profit sharing ratio. What will be your remaining profit? Your remaining profit will be 4 by 5 because new partner share is actually 1 by 5. So 1 minus 1 by 5, 4 by 5 will be the remaining profit. And remaining profit into old ratio. Old ratio is 3 by 5. So 12 by 25. Similarly, remaining profit 4 by 5. Old ratio is 2 by 5. That is equal to 8 by 25. And new partner share is 20%, 1 by 5. If I am going to convert them into denominator of 25, it will be equal to 5 by 25. So new ratio is 12 is to 8 is to 5. So in the ratio of 12 is to 8 is to 5, I will have to divide this 12,000. So 12,000 divided by 25, that comes to 480. 480 into 12, 5760. 5760. Then 480 into 8, that comes to 3840. And ultimately, it will be equal to 480 into 5, that is 2400. So this is how you are going to pass this entry. So now the general reserve will appear in the new balance sheet at 12,000. That means after exhausting the general reserve, we are creating a new general reserve, and for that all the partners are contributing this much. That is what we mean by this. Is it clear to you or not? This is how you are going to write the entry as far as this particular question is concerned. Is it clear to you or not? Yes, sir, absolutely clear. Now, if it is clear to you, what else is given in the question? Let me also see. I have already explained this point. I have explained this particular point. I have explained this one. And now 2,000 out of creditor is to be paid at 5% discount. That means out of 2,000 worth of creditors, we are getting a discount of 5%. Isn't it or not? Because it is clearly given that creditors are worth rupees 12,000. It is given in the question. Creditors are 12,000, but question is saying that out of 12,000, only 2,000 worth of creditors will be paid at a discount of 5%. So discount you are earning only 100. Don't take 5% of 12,000. Out of 12,000, question says that out of 12,000 worth of creditor, only 2,000 worth of creditor will be paid at a discount of 5%. So your gain is actually 100 only. This is the point which you need to take care. So question says that pass necessary journal entries, which I have already passed, and show the capital accounts and prepare the balance sheet of the new firm. So entries, whatever entries were required, I have already passed. Now we can start the solution. Now you can do it by yourself. First of all, on the credit side of the revaluation, I will write discount. There is only one item with respect to what we call revaluation. I told you discount will be computed on 2,000 worth of creditor and not on 12,000 worth of creditors, correct? So your revaluation profit will be 60 and 40. After that, we are going to prepare the partner's capital account. In order to prepare the partner's capital account, first of all, I will write the balances 12,000 and 10,000, correct? Here we have written the balances 12,000, 10,000. Then general reserve, we pass the entry general reserve account debit to F1 to F2, if you remember. General reserve account debit, this was the entry 7,200, 4,800, correct? And then we again passed another entry F1 account debit F2 to F3. So on account of which all these three partners will get what we call debited. Is it clear to you? Then workmen compensation fund entry we have passed. Workmen compensation out of 4,000, 2,000 will appear in the new balance sheet and 1,200 and 800 will be credited to partner's capital account. This is what we have done. In this question, new partner is bringing in 20,000 as his capital. So I haven't prepared cash account, but you can directly write in the balance sheet also in this manner. For example, opening balance of cash. See here in the balance sheet, cash balance is 9,000. Generally, there is no need to prepare cash account. You can straight away do the adjustment in the balance sheet. Cash account balance is 9,000 and new partner is coming up with 20,000. You are adding 20,000 to it. Number one. Number two. Now we have already seen that as far as premium account is concerned, correct? 3,000 premium was brought in cash. And out of 3,000, 1,800, 1,200 was credited. And whatever premium was brought in cash is also added to the cash account. Is it clear to you or not? Is it clear? Absolutely clear? Fine, sir. Is there any problem? No problem. We have written this entry. I will also explain here. Cash account debit to premium for goodwill account, on account of which cash will increase, and this entry, on account of this, F1 and F2 will get credited. But we passed another entry, F3's current account debit to F1, F2. This is what exactly I have written here. F1 account 360 and 240. Is it clear to you? So there will be a debit balance in F1's current account. There is no need to prepare F1's current account, but you should keep in your mind that this time F1 hasn't brought in rupees 600 out of his share of goodwill, so his current account will reflect a debit balance and ultimately it will feature in the new balance sheet. Is it clear to you? So 600 you are going to reflect it in the new balance sheet. Clear? Right, sir. It is clear. Absolutely clear. Now, whatever adjustments were there, we have already incorporated opening balance, general reserve, workmen compensation fund, capital, and then premium, and then finally revaluation profit 60 and 40. Finally, your balances will be this much, and these balances you are going to write in your balance sheet, correct? General reserve this time will appear in the new balance sheet, correct, because of this entry. And then workmen compensation fund, you should not forget to put 2,000, the liability portion. Now, as far as cash is concerned, you might be wondering, sir, opening balance is 9,000, 20,000 is the amount of capital brought in, and 3,000 is the amount of premium brought in. What about this 1,900? I will tell you. Because entry number 6, then entry number 7. Because in this particular question, it was given that out of 12,000 worth of creditors, 2,000 worth of creditors were paid at a discount of 5%. It was given in the question. So my entry will be sundry creditor 2,000, correct? Because I'm paying them at a discount of 5%, that means I'm getting a discount of 100. So I will pay them 1,900. I will pay them 1,900, so I will write here to cash. And then whatever discount I got, I will transfer it to revaluation, which we have already transferred. Now, what will be the impact of all these things? Because in the entry, you have debited creditors by 2,000. So in the new balance sheet, your creditors will appear. I haven't written here creditors. I will write here creditors also. Creditors were 12,000. And out of that 12,000, 2,000 will be subtracted. So 10,000 you are going to write here. Is it clear to you? Your creditors will get debited by 2,000 because out of 12,000, 2,000 worth of creditors were paid off. But they were paid off at a discount of 100. This 100 you have taken to the credit of revaluation only. And now this cash will be subtracted from the cash. And that is the reason I have subtracted 1,900 from cash account. So that is why your balance in the cash account will be 30,800. There is no change in debtors, no change in stock, no change in plant and machinery, no change in land and buildings. Correct? And current account you must not forget to write. Is it clear to you or not? Very interesting question. So you should be in a position to do this of your own. Is it clear to you or not? What about the now 2.5? Let's pick up 2.5 also. As far as 2.5 is concerned, please pay attention here. 2.5 is a pretty interesting question once again. So brick, and here it is given that brick, sand and cement are partners in this particular case. Correct? Brick, sand and cement are partners in a firm sharing profits and losses in the ratio of 3:2:1. And their balance sheet on 31st of March is also given to you. Their balance sheet is also given to you. Further in the balance sheet, what is given to us, that is 30,000, 20,000 and 10,000. This is given as far as capital is concerned. We are well aware of this particular fact that if there is any general reserve, we will take it to the credit of the old partners capital account. In fact, this time the old partners are brick, sand and cement. You have to keep track of that. Their profit sharing ratio is 3:1. And besides that, in this question, we have two liabilities. On the other side, if we are going to have a look, land and building 50,000, furniture 15, stock 20, bills receivable, Debtors, cash in hand and cash at bank is also given to us. Further, it is written, Lime is admitted as a new partner from 1st of January 2023. He will come up with 15,000 as capital. You can easily manage this one. Cash account debit to Lime's capital account. This will be your entry. He's coming up with 12,000 as premium of goodwill. Correct? And half of the premium is withdrawn. So you will have to pass yet another entry, this time for withdrawal of what we call goodwill. Correct? Lime will be admitted into the firm for 1/6 share in the profits. So a share of profit will be this much. Further, it is given that land and building is valued at 56,000. You will have to take the difference. Land and building was 50. It has gone up by 6,000. You are going to credit 6,000 to revaluation account. Furniture is estimated at 12,000. Its value is 15,000. So 3,000 worth of loss has taken place in case of furniture. The stock is 16,000. As far as stock is concerned, 20,000 was there. Now 16, 4,000 fall. And debtors likewise were in the balance sheet given 7,500. Now 7,500, of course, a loss. Further, it is given that the claim of a creditor of 2,300 is paid at 2,000. Similar to the last question, we will have to pass the entry. Now see here in this case, you have creditors to the tune of 6,000. See, out of 6,000 creditors, out of 6,000 worth of creditors, you are paying 2,300 creditors. So remaining creditors 3,700 will appear in the balance sheet, no doubt about that. But you are paying off these 2,300 creditor at a discount because you are paying them at 2,000, you are paying them at a discount. So to cash, you are paying them 2,000 and you are earning a discount. Discount will be taken to the credit of revaluation account to the extent of 300 in this particular case. Is it clear to you? Again, we are supposed to pass the entries and show the opening balance sheet of the new firm. We can easily manage this question. I think so. But still, just for your sake, I will do if you wish. Well, so first of all, in order to do this particular question, 2.5, we will take care of the entries, correct? Now, will you let me know what will be the entry first of all, because it is given in this particular question that new partner is coming along with 15,000 worth of capital. I will write cash account debit, 15,000 and 2, Lime's capital account, Lime's capital account. Lime is coming up with 15,000. I am going to write 15,000. Is it clear to you? Further, it is given that he is coming up with his share of goodwill of 12,000. So cash account debit 12,000. I am going to write. And this 12,000 he is bringing in. So to premium for goodwill account. To premium for goodwill account 12,000. This is the entry for bringing in his share of goodwill in cash. Then whatever his share of goodwill is, now you are going to credit that share to the old partner. So premium for goodwill account debit. Remember one thing, that this time there are 3 partners and partners are brick, sand and cement in the ratio of 3:2:1, and 3:2:1 is old ratio and sacrificing ratio also, because only old partners profit sharing ratios are given and incoming partners share is given. So our sacrificing ratio will also be equal to 3:2:1. Is it clear to you or not? Right, sir. However, in this question you were given that half of the goodwill is withdrawn. So half of the goodwill is withdrawn. You will now debit the partners. And now you will debit and you will credit cash. That means he was credited with 6,000. He is withdrawing 3,000 from his capital account. That is what we mean by withdrawal of goodwill. Similarly, he was credited with 4,000. Out of 4,000, he decided to take 50%. Similarly, cement, 1,000. So 6,000 worth of cash will flow out. Is it clear to you? After passing down these entries, now in this particular question, there is also, because in this particular question it is stated that we are supposed to pass the entry, in the balance sheet there is reserve also. Just to acquaint you with the entries, I am writing it. Reserves was given in the balance sheet at rupees 30,000. So 30,000 must be transferred to partner's capital account. Correct? Brick, sand and cement. Brick, sand and cement. In the ratio of 3:2:1. In old ratio, we will have to credit. But this time it is not given that reserves has to be maintained at its original value. So don't pass unnecessarily that entry which we passed in the last question. And further, in this particular question regarding reserves, let me also see any further information I think was written with respect to reserve. Let me check it out. Is there any further information is given? Right. At the end of the question, in a disguised manner, it is also given that half of the reserves is to be withdrawn by the partner. So if some further information is given, you have to take care of, because we read the question till up to D, but one more information is given, half of the reserve is withdrawn by the partner. So it was nice that we made a check, correct? So half of the reserve has been withdrawn. What does it mean? Try to understand. Crediting partner's capital account means firm is still supposed to pay them. When we credit the partner's capital account with their respective share of reserve or profit, it means actually their capital account is increasing. But when we will make them actual payment, their capital account will decrease, because now it is given that half of the reserve is also withdrawn. So again, I will have to write this entry: brick account debit, sand account debit, cement account debit, and 2 cash account. That means now firm is making them actual payment. Correct? When we say we are crediting, it means we are still supposed to pay them. But when we are making them actual payment, their capital account will decrease. So out of 15,000, half amount has been withdrawn. So 7,500. Similarly, sand account debit, out of 10,000, 5,000 amount has been withdrawn. And similarly, with respect to C, 2,500 withdrawn. So out of 30,000, 15,000 worth of reserves have been withdrawn. Is it clear to you or not? Right, sir. So these are some important entries as far as this particular question is concerned. But regarding revaluation, because this question has asked us to pass the entries, that is why I am writing the entry. As I told you, out of 6,000 worth of creditor, it was given in the question that 2,300 worth of creditors were paid off at rupees 2,000. So I'm going to write here 2 cash. I'm going to write here 2,000. And we are earning a discount of 300. It means this earning is a gain to us. It will be taken to revaluation account. Is it clear to you or not? Similarly, it was given in the question that as far as land and building is concerned, we read the question and we saw that value of land and building has gone up by 6,000. So this will be the entry for appreciation in the value of land and building. However, value of some items also fell. For example, first of all, let me write the entry: revaluation account debit. Value of furniture has come down by 3,000. So I will write to furniture and fixture. Similarly, value of stock has also fallen down by 4,000. So I will write here to stock. And similarly, in this case, debtors which were appearing in the balance sheet at 7,500 found at 7,000. So their value came down by 500. So 7,500 is your loss also. Now, just to make the point, you can see your revaluation account is getting debited by actually 6,000. Your revaluation account is getting debited by 6,000, and revaluation account is getting credited by 6,000 and getting debited by what we call 7,500. So debit is more. That means ultimately there is a loss. So next entry is for transferring the revaluation loss. So revaluation loss will be equal to 1,500, and this 1,500 will be transferred to partner's capital account. Correct? There are 3 partners, 3 old partners: brick, sand, and cement. And you will use the ratio, old ratio, 3:2:1, 600. Sorry, there is a revaluation loss. Revaluation loss is there, sorry. So your entry will be brick account debit, sand account debit. There is a loss actually. So partners capital account will be debited 600, 400 and 200, and two revaluation account. That is equal to 1,200. Loss on revaluation transferred. How you computed the loss, as I told you, there is a balance of 7,500, correct? Whereas there is a balance of 6,000, 6,000, the balance is 6,000 and 7,000, the loss must be equal to 1,500 then. Let me check it up. Revaluation loss is equal to how much? 1,200, or in case of creditors also we got some 300 again is the credit. Let me check it up. Just give me time, because we are simply passing down the entry. Let me have a look over the question first. Is there some more information it could be possible? Value of land and building went up by 6,000. Okay, 6,000. This is gain. Let me check it up here. And then, as far as value of furniture is concerned, furniture value has fallen by 3,000. Value of furniture, then we have stock. Value of stock has fallen by 4,000. Fine. Value of debtors have also fallen by 500. Okay, again fine. And there is another gain in the form of 300. There is another gain in the form of 300. So ultimately, it is 6,300 and this is 7,500. So difference between 6,300 and 7,500 is 1,200, right? So it's okay. It is better to make a check whenever you have some confusion. So because question was not in front of me, so I will write the entry. Actually, what we did, we simply took the difference of 7,500 and we took the difference of 6,000. Actually, total credit balance, see here. Total debit balance, first of all, let me explain, 7,500, and total credit balance is not 6,000 because revaluation account is also getting credited here. So 6,300 is the balance. So revaluation loss is 1,200. So we have to ultimately pass the entries in this particular question. Is it clear to you or not? Further, now, just to make the point a little bit more clearer, see, I must have the complete satisfaction that you are able to understand it comprehensively. So, I will prepare now capital accounts. Capital accounts. And in order to prepare the capital account, I will require a bit of space in this particular case because there are 4 partners. Correct? So I will have to create the space first of all. Let me create it. I think this much is enough. One partner is brick, another one is sand, very peculiar name, then cement, and then lime. Correct? So we write here brick, we write here sand, we write here cement and lime also. As usual, first of all, we are going to bring down the balances. So balance brought down, that is 30,000, 20,000 and 10,000. These are the balances as per the balance sheet which is furnished to us. Correct? After bringing down the balances, now we have passed in this particular question lots of entries. First of all, in the balance sheet there is reserves also. Reserve in the balance sheet, we are going to credit the same 15,000. 10,000, 30,000 worth of reserve was there, it will be credited. And then we are going to debit, because half of the reserve has been withdrawn. So I am going to write here to cash. Half of the reserve is withdrawn. So 7,500, 5,000 and 2,500. Correct? After this is with respect to reserves we are talking about. Then new partner is coming up with capital of rupees 15,000. Cash account debit to Lime's capital account. And if you want to prepare the cash account also, correct, then on the debit side of the cash account, okay, I will prepare the cash account here itself just for better understanding. I will prepare the cash account. First of all, let me see what is the opening balance in the capital account as per the balance sheet. Opening balance is 2,500. And as per this entry, I am going to write here to Lime's capital account 15,000. Next entry was with respect to premium, correct? Lime was bringing the premium, so entry was cash account debit to premium for goodwill account. To premium for goodwill account. So I am simply writing to premium, and he is bringing in premium to the extent of 12,000. And we are not going to prepare premium for goodwill account. This premium will be credited to the partner's capital account. So I am going to write here by premium account. Instead of writing premium for goodwill, you can simply write premium account, no problem. This 12,000 worth of goodwill will be credited, 6,000, 4,000, 2,000. But problem is that in this particular question, half of the goodwill is also withdrawn. So we will have to move to the debit side, and I will again write here to cash. So 3,000, half of the goodwill has been withdrawn. 4,000, so 2,000 and then 1,000. And in the cash account, see here, both these items I will have to write here. For example, I will write here on the debit side of B, S and C, I have written to cash. So on the credit side of the cash account, I will write by B, by S, by C. I can total them up. This total will be equal to 15,000. So because 15,000 of reserves were withdrawn. Similarly, total goodwill withdrawn 3,000, 2,000, 1,000. Again, I will write by B, by S, by C. I can write total 6,000. Is it clear to you or not? Now, further in this particular question, there is revaluation loss. The revaluation loss which we just computed, 1,200, 600, 400 and 200. Correct? Then after incorporating all the things, now we are in a position to balance these capital accounts. If I am going to balance, then what will be my balances? Balance carried down, correct? Balance carried down. If you are going to balance them out, 45 plus 6, 51 minus 10,500 and 600, that will be equal to 39,000 something. 39,900, I think so. Similarly, 30,000 plus 4, 34,000 minus 7,400 will be equal to 26,600. 15 plus 2, 17,000 minus all these things will be equal to 13,300. And then 15,000. You must make a check. I keep on telling to the student, please make a check. Correct? And let me also check out whether we have furnished all the entries or not. Let me also check it down so that I want to actually inculcate this habit in you to make a thorough check before you jump over the solution. See here, we have passed this entry cash account debit to lines capital account, correct? We have passed this entry cash account, we have incorporated this entry in fact, cash account debit to premium for goodwill, then goodwill has been credited to partners capital account, we have passed this entry. And then this entry was withdrawal of goodwill. We have also written that. That means we have taken care of that. Reserves account were credited to partners capital account. We have done it. And then reserves were withdrawn. We have also done it. And regarding creditors, we have already passed this entry. But important thing is that because here you are paying the creditor to the extent of 2,000 rupees, you must not forget to write on the credit side of the cash account by creditors 2,000 because you have already taken care of 300. And then revaluation we have taken care of. So only thing remaining is before we balance the cash account, correct? I will write here by creditors because we have made a payment of 2,000 to the creditors, if you remember. That is why I keep on telling that before you attempt anything, before you jump over a particular thing, always make sure that everything have been incorporated, correct? So now what will be your balance in the cash account? 27,000 plus 2,500, 29,500 minus 23,000. So that will be equal to 6,500. So 6,500 will be your balance. Is it clear to you? Now, if you want to prepare the balance sheet, you can prepare the balance sheet in a quick time, no problem. I will prepare it for you, post-admission balance sheet. Post-admission balance sheet. As far as balance sheet is concerned, first of all, towards the liability side, we will write the respective capitals of all these three partners. As far as brick is concerned, we got the capital 39,900. Then sand's capital balance was 26,600. Then cement's capital balance was 13,300. And then lime's capital balance was 15,000. Lime's capital balance was 15,000, isn't it or not? As far as creditors are concerned, I have already told you, out of 6,000, 2,300 worth of creditors have been settled. So creditors balance which will appear in the balance sheet will be 3,700. Bills payable, there is no change, 4,000. This is how you are going to prepare the balance sheet. Is it clear to you? If you are going to tally it, it will be equal to 1,02,500. This is how you are going to prepare the balance sheet as far as liability side is concerned. Similarly, asset side, almost everything is given because you are given the revised amount. For example, it was given in the question that land and building is estimated at 56,000 because earlier it was 50. Similarly, it is given that furniture now estimated at 12,000. So all you have to do is simply write here 12,000. Then stock is estimated at 16,000. So you will write here 16,000. Similarly, bills receivable, although there is no change in bills receivable, 5,000. But debtors now estimated at 7,000. In the old balance sheet, it is 7,500, now estimated at 7,000. Cash account. We got the balance 6,500. So this is how you will have to do this particular question. And if I am going to tally it out, 1,02,500. 1,02,500. Is it clear to you or not? So this is how you are supposed to do this particular question. And with that, we have, as I promised in the last session, in fact, that we are going to finish up this particular section. I think we have finished up this. So, right, now in the next session, we are going to start section 3, questions related to capital adjustments. Even these questions are very interesting one. Not very easy, but questions which require a bit of attention, correct? So shall meet you then in the next session as usual and at same time. So till then it's time to say a lovely good night.